The screen is black, featuring a single bold white statistic, 700%. In the volatile world of the stock market, a number like that usually signals a once-in-a-generation event that reshapes the financial landscape. As we look at the current state of the semiconductor industry, a critical question emerges for every investor and analyst. Is this the greatest creation of wealth in the history of technology? Or are we simply watching a high-tech repeat of the year 2000 dot-com fiber optic disaster? Back then, the market was fueled by the promise of an interconnected world, leading to a massive overbuild of infrastructure that eventually crumbled, leaving many with nothing but worthless paper and broken dreams. Today, the catalyst is artificial intelligence, and at the center of this hurricane stands Micron technology. They are a titan of industry and notably the last major United States-based memory chip manufacturer. For many years, Micron was seen as a reliable but predictable player, moving in sync with the cycles of the personal computer and smartphone markets. However, the recent surge in their stock price is not just about selling more of the same. It is driven by a fundamental transition from traditional memory to what is known as high bandwidth memory, or HBM. Since the early months of 2023, the world has been captivated by the sudden explosion of generative artificial intelligence, spearheaded by the launch of ChatGPT. This shift created an insatiable demand for raw processing power, making NVIDIA the most important company in the world overnight. But there is a technical reality that many retail investors often overlook. An artificial intelligence model does not just require a powerful processor to function. It needs short-term memory that can operate at speeds previously thought impossible. Without the specialized memory chips provided by Micron, such as the HBM3E, NVIDIA's flagship H100 processors would be like a Ferrari stuck in a gridlocked city. The engine is capable of incredible speeds. But if the road is too narrow to let the fuel in and the exhaust out, the car cannot perform. Micron provides that high-speed road, and in doing so, they have become the essential partner in the entire artificial intelligence infrastructure. This massive rally has played out across global data centers and the Nasdaq exchange, bringing Micron into the spotlight as never before. This story is a continuation of our deeper look into the growth of the semiconductor sector, and while the current momentum seems unstoppable, we must prepare for the other side of the coin. In the third part of this series, we will examine the potential risks and the bear case that could disrupt this trajectory. For those who value financial forensics over market hype, this is a journey worth following. Before we continue, subscribe to the channel and tell us in the comments where you are watching from. The global memory market is not a crowded field of many competitors. Instead, it is a tight oligopoly controlled by only three dominant forces: Micron, SK Hynix, and Samsung. For decades, these three companies have been locked in a fierce battle for market share, often resulting in periods of oversupply that crashed prices and hurt profitability for everyone involved. However, the specialized nature of HBM3E has changed the rules of engagement. To visualize the difference between standard memory and this new technology, think of a water pipe. Standard DDR5 memory, which you find in most modern computers, is like a common garden hose. It works perfectly for its intended purpose of watering a lawn or filling a bucket, but HBM3E is more like a massive industrial dam with multiple spillways open at once. It allows a gargantuan volume of data to flow into the processor simultaneously. This is achieved by stacking memory chips vertically and connecting them with thousands of tiny wires called through silicon vias. This architecture minimizes the distance data has to travel, which is essential for the massive, complex calculations required by modern artificial intelligence models. This technological dominance has secured Micron's place as a certified supplier for NVIDIA's next-generation Blackwell architecture. The significance of this partnership cannot be overstated, as NVIDIA's dominance in the server market essentially dictates who wins and who loses in the memory space. During a recent earnings call, the chief executive officer of Micron, Sanjay Mehrotra, provided a statement that sent shockwaves through the financial industry. He noted that the company is essentially sold out of their high-bandwidth memory capacity through the entirety of 2025. This means that even if a new competitor entered the market tomorrow, the major contracts and the production lines are already committed to the biggest names in tech, including Google, Meta, and Microsoft. The financial headlines from outlets like Bloomberg and Reuters are currently filled with charts showing a historic shift in revenue. For the first time, Micron is generating more money from the massive data centers powering the cloud and artificial intelligence than they are from consumer electronics. This reduces their dependence on the unpredictable cycles of phone and laptop sales. placing them at the heart of a global infrastructure build-out. We are seeing a move toward a new standard where memory is no longer a cheap commodity, but a premium high-margin component that commands top dollar. Inside the automated clean rooms where these chips are made, the precision is staggering. These facilities are some of the most expensive and complex buildings ever constructed. Every wafer of silicon is handled by robotic systems to avoid even a single speck of dust, which could ruin $1 million worth of hardware. This high barrier to entry is what keeps the oligopoly in place, as the cost to build a new factory now reaches into the tens of billions of dollars. But while the world focuses on these soaring profits and the narrative of a new era, a familiar shadow is beginning to stretch across the industry. It is a phenomenon that has derailed every semiconductor boom in history, from the early days of the personal computer to the smartphone revolution. Even with the unprecedented demand for artificial intelligence, the laws of supply and demand remain in effect. This shadow has a name that serves as a warning to those who buy at the peak of the market. It is called the cyclical trap, and it may be closer than it appears. When we look at a side-by-side comparison between the year 2000 technology bubble and the 2024 artificial intelligence surge, the visual evidence is enough to make any seasoned investor pause. We must ask ourselves if we are truly buying into a revolutionary future, or if we are merely paying a premium for the collective hype of a market in a fever state. The central question remains whether this is a structural shift in global computing or another repeat of the boom and bust cycles that have defined the semiconductor industry for decades. The narrative of the supercycle suggests that artificial intelligence is not just a passing trend, but a total reimagining of how the world utilizes data. Every server in every data center across the globe is currently in need of a massive memory upgrade. This is not a luxury or an optional improvement. It is a fundamental requirement for the next generation of computing. The demand for high bandwidth memory is fundamentally different from the demand we saw for traditional memory in the past. In previous cycles, memory was largely treated as a commodity, where price was the only factor that mattered to the consumer. However, in the current landscape, the extreme complexity of producing HBM3E has given Micron immense pricing power. This specialized technology involves stacking multiple layers of memory, a process that is incredibly difficult to master. Because they are one of only 3 companies in the entire world capable of doing this at scale, they can command profit margins that are as much as 3 times higher than those of standard memory chips. This shift means that Micron is not simply selling more units of a basic product. They are extracting significantly more value from every single wafer they produce. Despite a 700% rise in the stock price, some argue that the earnings have grown so rapidly that the stock is not as expensive as it appears on the surface when compared to historical market peaks. We are witnessing a monumental shift in revenue focus as Micron moves away from its traditional reliance on consumer electronics like personal computers and smartphones. Today, the dominance of the data center is absolute. Enterprise spending is the engine driving this growth, and as long as the giants of the tech world continue their arms race to build the most powerful artificial intelligence models, Micron sits in a very comfortable position. This data center dominance provides a level of stability that the company has rarely enjoyed in the past, as these large-scale infrastructure projects often involve multi-year contracts and long-term planning. It is no longer about the individual consumer buying a new laptop every few years. It is about global corporations building the digital backbone of the future. However, even with such a strong bull case, we cannot ignore the ghost of overcapacity that haunts the history of memory manufacturing. Every major memory boom in history has ended with a devastating oversupply crash. It follows a predictable pattern where high prices lead companies to invest tens of billions of dollars into new factories. When all these new facilities finally come online at the same time, the market is suddenly flooded with chips, causing prices to collapse and profits to vanish. There is also the growing concern of double ordering. In a market where supply is tight, it is common for large companies to place orders far in excess of what they actually need just to ensure they get at least some supply. This behavior creates a phantom demand that can evaporate in an instant, leaving manufacturers with mountains of unsold inventory and falling prices. The geopolitical landscape adds another layer of complexity to the bear case that many investors overlook. China is currently pouring immense resources into its state-backed memory firm, CXMT. Their goal is clear: to break the Western oligopoly and achieve self-sufficiency in semiconductor production. If CXMT is successful in achieving technological parity, or even just producing massive quantities of slightly older memory, It could trigger a global supply glut and a fierce price war. This threat looms over Micron's long-term outlook, especially as trade tensions between the United States and China continue to simmer. Any disruption in global sales or a sudden influx of cheap competition could erode the high margins that investors are currently banking on. When we look at the actions of the big money players, the signals are mixed but worth noting. Tracking the flow of institutional ownership shows that while many large funds are still heavily invested, there has been a noticeable trend of insider selling over the last 12 months. When the executives who run a company begin to sell their shares in large quantities, it often suggests that they believe the stock has reached a fair valuation or that the short-term risks are increasing. These insiders have the best view of the company's order books and future projections, which is why their movements are a key part of our financial forensics. Watching where the whales move is often more revealing than reading any press release. To provide a brief breakdown of why this matters so much, we have to realize that artificial intelligence cannot exist without memory. While much of the world is focused on the incredible processing power of graphics units, those units are essentially useless if they cannot access data at high speeds. High bandwidth memory is the essential bridge that makes the entire system work. If the processor is the engine of the car, the memory is the high-speed road. Without it, the most advanced chips in the world are nothing more than expensive hardware that cannot reach its potential. This realization is what has driven the stock to these historic heights, but the question remains how long the road can hold under the weight of such high expectations. There is one specific number buried within the balance sheet of Micron that many retail investors are completely overlooking. It is a metric that tracks the efficiency of their operations and the true health of their demand. This single number is the difference between a multi-bagger success and a total loss, and it provides the clearest signal of when the cycle might be starting to turn. In a market driven by momentum and excitement, this sober reality check is the only thing that will keep your portfolio safe when the music finally stops. Understanding this ratio is critical for anyone who wants to navigate the final stages of this historic run without being caught in the eventual downturn. We must look past the surface level headlines and into the hard data to see the truth behind the surge. The future is being built, but the cost of that construction is higher than most realize. The success of Micron is not occurring in a vacuum. It is creating a massive ripple effect that is forcing the entire semiconductor industry to transform overnight. As Micron secures its lead with high bandwidth memory 3E, its competitors are being forced into a desperate catch-up mode. Samsung, once the undisputed king of memory, is now facing a technical crisis. They are pouring billions into research and development to solve the engineering hurdles that Micron has already cleared. This pressure creates a dangerous environment. When a giant like Samsung is backed into a corner, they often resort to aggressive pricing or massive production increases to regain market share. This could inadvertently trigger the very cyclical trap that investors fear most. If Samsung and SK Hynix successfully ramp up their own production to match Micron, the world could go from a memory shortage to a massive oversupply in a matter of months. This industry shift is also felt in the wallets of everyday consumers and corporations. The surge in memory prices is not just a line on a stock chart. It is a real cost that is being passed down the line. We are already seeing the economic ripple effect as the cost of artificial intelligence cloud subscriptions begins to climb. Future high-end laptops and mobile devices will likely see price hikes as manufacturers struggle to absorb the expensive high-bandwidth memory required to run on-device artificial intelligence. The very technology that is driving Micron's profits is making the digital world more expensive for everyone else. This raises a critical question about the sustainability of the current boom. If the cost of building and running artificial intelligence becomes too high, will the demand from software companies eventually cool down? To understand where we are, we should look back at the history of global infrastructure. Consider the laying of the railroads in the 1800s. It was a massive building project that changed the world forever. The tracks that were laid down back then remained and formed the backbone of modern transport. However, the investment landscape was a graveyard. Many of the original railroad companies went bankrupt because they overextended themselves during the height of the hype. We are in a similar infrastructure supercycle today. The data centers being built will remain. The artificial intelligence models will continue to evolve. But that does not guarantee that every company building the hardware will remain at its peak valuation. The infrastructure stays, but the players can change, and the profit margins can evaporate once the initial build-out is complete. Looking forward, there are two primary scenarios for the future of Micron. In scenario A, the supercycle narrative proves to be true. Artificial intelligence demand continues to outpace supply for 5 or more years as every industry from healthcare to finance integrates deep learning into their core operations. In this world, Micron becomes the new Intel of the 21st century. They maintain their technical edge, and their memory chips become the most valuable commodity in the global economy. Their earnings continue to justify their stock price, and the current 700% gain is seen as just the beginning of a multi-decade climb. In scenario B, however, the bubble begins to leak. By 2026, the initial wave of data center construction reaches a plateau. The giant tech firms realize they have enough capacity for their current needs and slow down their orders. At the same time, technical advancements make high bandwidth memory easier to produce, turning it into a common commodity rather than a specialized luxury. Prices crater by 60%, and Micron's massive profit margins vanish. In this scenario, the stock undergoes a violent correction as the market realizes it priced in a decade of perfect growth that never materialized. Now we must address the ultimate question: is this an infrastructure supercycle or a semiconductor bubble? The honest response is that it is both. We are undeniably in the middle of a once-in-a-generation shift in how computers are built. This is a real structural change, not a temporary fad. However, the financial markets have a habit of pulling future value into the present. The 700% rise in Micron stock is a clear signal that investors are betting on years of perfect execution. It is a sober reality that cycles are, by definition, temporary. Even the strongest supercycle has moments of exhaustion. The final wisdom for any investor watching this space is to stop looking at the fluctuating stock price and start looking at the inventory to sales ratio. This is the single most important number in Micron's balance sheet. When this ratio starts to rise, it means that the company is producing more than it can sell. It is the first sign that the music is about to stop. In the world of memory, inventory is like a ticking time bomb. If it sits on the shelf for too long, it loses value and must be sold at a loss. As long as inventory remains low and sales remain high, the bull run has legs. But the moment that balance shifts, the cyclical trap will snap shut. We can compare this current frenzy to the story of Cisco in 1999. At that time, Cisco was the backbone of the internet, providing the routers that made the World Wide Web possible. Everyone knew the internet was the future, and they were right, but Cisco's stock was priced so high that it took years to recover after the bubble burst. Our philosophy on this channel remains consistent. In a gold rush, it is often wise to sell the shovels, but you must be careful not to buy the shovel factory when it is being valued at the top of the mountain. Micron is currently the world's most important shovel factory, but the price of entry is higher than it has ever been. As we look toward the future, the question for you is simple. Do you believe Micron is a core hold for the next decade, or are you waiting for the inevitable crash to find a better entry point? The answer depends on your belief in the longevity of the artificial intelligence boom. But remember, the next winner in this space might not be a chip company at all. In our next deep dive, we are going to explore why the next great beneficiary of the artificial intelligence revolution is actually a global energy giant, because all these chips and all these data centers require an amount of electricity that the world is currently unprepared to provide. To understand the future of technology, we have to follow the power. Thank you for joining us for this 3-part investigation into the memory wars. Be sure to subscribe so you do not miss our upcoming analysis of the energy crisis that could bring the entire artificial intelligence movement to its knees.